Trading Nut Q&A time with Andre Stewart from Chart Artist Trading. So, Andre, today's question is, how do you analyze the top and the bottom of a trend accurately, at least with high probability, via the combination of candlestick, S&R lines, indicators, Fibonacci, or perhaps time analysis? I believe the professionals had done it successfully, but I really wonder how they do it. I believe this is one of the edges of trading in which separates the good ones from the bad traders. And that was from Yen from Malaysia, or Jean from Malaysia.
All right. Malaysia's in the house.
Yeah.
Here you go, right? I don't want to sound like I'm trashing this guy because I'm not. This answer is just fully intended to help and to only help. Thinking like a retail trader. Fibonacci, indicators, this, that, and the third, right? How do you analyze? And here's the thing, trend, right? Trend implies the market's going to go one way forever, right? But people, you have to get away from words like trend, right? And I prefer the term direction, right? The direction is this way until this happens. Okay. So how do you accurately analyze the top or bottom of a trend? You have to look at it with, a clouded chart equals a clouded mind. So if you have to have all these indicators and all that other jazz on your chart, your mind's clouded and you're relying on way too much to have to trade. And if you're indeed having to rely on indicators and fibs and all this other stuff that doesn't have anything to do with analyzing a market, you're behind the eight ball. And then you always have to look at the chart with no bias. Indicators show what? They show bias. All because if the moving average is doing this, price should be going that way. But then 98% of the time, everybody fails. So that likely means you're doing it wrong. So what I would do, and I'm probably going to say a little bit too much here, but who cares? Look at it from a non-biased point of view. Because when I was scalping, for lack of better words, how I was analyzing is I was always scalping against the trend. But what I figured out was against that trend, those ended up turning into reversal trades, right? And very, very high probability because I had a rule. I had a rule around the scalping. And it was like a 2 to 5 pip stop on every trade. But I would analyze price from a higher time, and that's the key here. Like so many people focus on the lower time frames, and it's a factor of impatience. So the higher the time frame, obviously, the better. And you have to look at the charts without bias. And you're looking at the chart and you're saying, okay, the market said it couldn't go any higher or lower than this specific area right here, right? Do that. And then you sit on your hands and you let the market come into that area. You also have to accept the fact that it may not come into that area, especially when you want it to come into that area. And when it comes into that area, here's the thing. You have to define what you are looking for, right? Because everyone's going to see the market just a little bit differently. So I knew when I was trading these reversal points that I wanted to see price touch my reversal point, right? Or go into the reversal point, close outside of it on the 5-minute chart, and then I would go pretty heavy on the risk and have like a 5 pip stop, and it worked 75 to 80% of the time. But if price came back into that area again, I wouldn't take the trade. Because people think, oh, support and resistance is this and this and that. No. Support and resistance, if a level's hit so many times, everyone's thinking it's support and resistance, but it's likely not, because when you think about it from like what the market truly is, and it is truly a market. What moves the market? Volume. So if price is hitting a level over and over again, what is it doing? It's drying up that volume. So eventually what's going to happen to that volume? It's not going to be there anymore. So guess what the market's going to do? It's going to go to the next best price. So look at the market from a pure price perspective, not necessarily a support and resistance perspective, not necessarily a indicator perspective, but from a market, you have to look at your prices. And then start analyzing the markets in your everyday life. Grocery stores, determine what products are selling at a grocery stores and why. Are they cheap or are they expensive, right? And analyze the gas market in your country. Like I do all this weird stuff because it always ties back into trading in some way, shape, or form for me. So really to boil it down a bit. Oh, I also want to say, don't even count on reversal points because it takes a lot to stop a trend. It takes a lot to stop a trend. You're way better off attempting to determine where the trend's going to continue. Way better off, right? Instead of trying to pick a top or pick a bottom. That will come with time. I hope that answers that question.
It's a great answer. It's a great answer. And guys, recommend rewinding, listening to that again a few times to pick up all the nuggets. All right, thanks for that one, Andre. Loved it.
No problem.